The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the June 10th marvelous Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you tools that, well, just simply tools that empower human potential, because living up to our potential is something we must master each and every day. So let's begin with an empowering belief or two or three out here. Marie Curie once wrote the following: one never notices what has been done. One can only see what remains to be done. So, folks, I say today we'll go see if we can figure out what remains to be done in these markets out here. You know, there are 4 steps to achievement. This is Steve-O-ism here. 4 steps. They are plan, and I say plan purposefully. Prepare. I say prepare diligently. Proceed. I say proceed positively. And most of all, folks, be persistent, which I say persistently pursue whatever your outcome is. If there's anything that I am, it is persistent. And today, we'll prepare our plan to proceed persistently out here. And then thirdly, let's finish this off with an old Chinese proverb. And it goes like this: better to return and make a net than to go down to the stream and merely wish for fish. So today, we'll go try to build our net, because we are absolutely going to go fishing, folks. Right now, let's go check out these markets. We've got the Dow trading off about 28 points out at 15,220. S&P down 3.5 at 1639. Composite off 2 points at 3466. Russell 2000 down 3 at 984. Google's up a couple bucks. Apple's up 5. Microsoft down 8 cents right now. Intel up 33. Cisco basically unchanged. Apple is the leader in the clubhouse. Trailing Apple is Monsanto up 437. Toyota Motor Corp up 3% here, getting in on the action. Stellar One, news of a potential buyout. That's up about 19%. That's up $3. IHS Inc. IHS is their ticker symbol. They're up 260 or so. You got Atlas Energy up 260. Google's now up $3. X1. XONE. That is one of the 3D companies. Haven't looked at that stock chart for a while. It's up 4%. This morning up $1.87. We'll try to peek in on that. Wynn Resorts up $1.86. That's all to the upside. To the downside, this is interesting, Biogen, BIIB, and it is the biotechs, pharmaceuticals out here that seem to have been really a leader on the way down. Well, two of the top three. You got Biogen, BIIB, that's off 1.5%, off $3, and Alexion Pharmaceuticals off $2 right now. BlackRock jumping in here, not to be outdone. It's off about 3. That's down 1%. Tesla off a couple bucks, not a big deal out there. Rovi Corp, ROVI, off 6% this morning. That's down $1.71. Celgene, here we go. We got Celgene, CELG off $1.70. That's about 1% out there. Concho Resources off $1.50. Lennar in the housing area. LEN is a ticker symbol. They're off 4% this morning. We'll peek in on that. And anything else that you would like, our call-in number is 877-927-6648. Hope everybody had a great weekend out there. It is summer, so maybe you're planning for a vacation. Maybe some of you are actually listening on your mobile device, and you're on vacation. If you are, just kick back, relax, and we'll just check out the markets for you. Right now, we're going to take a look here at the ES Mini, and then we'll go take a look at the indexes, see what was done, see where things are traveling. Right now, with the futures, the futures are pulling back, the market pulling back just slightly out here. We've got the 10-minute chart now for the ES Mini up on my screen, and it ought to find some support. We'll see if it does as it gets down into that 1637 level. 1637 happens to be the point 382 retracement off of a swing point low that came in at 6:30 a.m. on Friday, out at the 161850 mark out there. all the way up to the swing point high that was put in this morning at 9:40. Again, the 10-minute chart that we're looking at, you can see the last time also down here, you'll see a green, kind of squiggly line going across my screen. If you are watching us on Tiger TV, maybe you're listening on your mobile device at tfnn.mobi. Remember, you can catch the live stream of this show by going to the homepage of tfnn.com. On the right-hand side, you'll see that button, 3 little smartphones. Click on that little bugger. This show will stream live. You can see the chart that we're looking at, and you would see this green line out here, the 200-period exponential moving average, which is at a price point of about 1636. So we'll see if this area here can hold on the 10-minute chart. As far as the volume coming out of it, nothing that is so substantial that you've got to worry about. It's really going into these sessions back here at 10:10. So how about this? So it's going back to a Friday session at 10:10 that had 129,000 contracts to the upside. That's what it's trading into. And as it got down here, just in the last 10 minutes, it was 78,000 contracts. So volume-wise, not that big of a deal. We can also see on the 10-minute chart here, getting in towards that sold condition, just using our relative weakness indicator out here. So 1636, we'll see if that level will hold 1637-ish. If not, 1629 would be on the horizon. And also, really nothing would be wrong there. That would be a natural pullback into the 0.618 level. And with the EKG, and again, this is a 10-minute chart. If I switch over to the 30-minute chart out here, the 30-minute chart will show that we've got more room to run before you get into that oversold condition. And this is the one that I really like to use to give us the idea of when the market is either overbought or oversold and what it's doing. Now, you can see here on the ES Mini coming off of the swing point low at 12:30 on Thursday, that level of 1596.50. Our B point on this, our A to B move, a nice straight line move going into the close of that session on Thursday as it got up to 1624.25. Not really much of a pullback here, still a pullback nonetheless, and it made a 1-to-1 A to B equals C to that price projection. 1646. It completed that here at 4:30 this morning, and they do have a little bearish engulfing candle, but so far, as I say, not a volume. Let's see, volume so far 105,000 contracts in this 30-minute session versus the first one, which had 259, and we're almost halfway through it. So still not looking too bad. On the 30-minute chart here, says that if we take a look at the 200-period exponential moving average, is going to line up really right with this descending price channel. So look for, on the 30-minute chart, says support would be right around 1638 and a quarter. It does have a little bit more room to run to the downside to get into that oversold condition. Now, let's go switch over. Let's go take a look at the index charts out here. And let's take a look at where things are trading. Let's start off here with the S&P 500. The S&P 500 forming a really nice Gartley, 0.618 Gartley buy. That's what happened as price was moving down on Thursday. Made a 0.618 retracement. Also made a 2.0 expansion of a set of swing points out there. And then if we take a look at from the high, that is the May 22nd level. That was from 1687.18 down to Thursday's low of 1590. You can see that it is close to getting up to that 0.618 retracement level. Now, what it has not done, let's see if it has actually done this. The low of May 22nd, this is where we want to be paying attention here. So the low of May 22nd is 1648.86. So far, it's gotten up to 1648.69. So still trading just below that area. And before you would want to say, hey, this is a reversal here, you'd sure like to see it tag that area. So knowing that on the intraday chart here, we're moving into, an area where it can begin to bounce. On the 10 to 30-minute chart out here, I'd say the work still to the upside is not completely done. Now, this is not a move you have to jump in here right now because we have a nice A to B move on the way down. And yes, it still is down. The trend is down. There's no question that the wider swath of the market, even after, look, the bounce on Thursday, that was to be expected, either because you were taking a look at larger patterns such as this 0.618 Gartley buy. Maybe you were, like me, take a look at some other leading indicators out there, said we were going to have a pretty nice bounce. That's, in fact, what we have done out here in the marketplace. Inside the S&P, you're really going to want, other than a close below, look, you get a close below Friday's open, That level is 1625.27. Then that says, okay, that bounces over. It was just a two-hit wonder, a two-day wonder. Otherwise, says that the 1653 to 1668 level is still game, is still fair game out there. And certainly you'd like to see the S&P get up to 1648.86, at least tag that swing point before it's tag and go out here. Let's go take a look at the other indexes. Let's go take a look at, and here's the one really also to be paying attention to. In fact, here's where I get my cues from, the New York Stock Exchange. It has been making lower lows. This has got the change in trend out here. It made about a 70% Gartley buy pattern out here. And so today, the New York Stock Exchange, you get a close below this number here, which is 9290.98. That actually would spell double trouble, toil and bubble. I know I got that whole Macbeth thing all messed up there, but it was fun to do it anyways. Why do I say double trouble? Because on the New York Stock Exchange so far, all we've seen is a 0.382 retracement. That's coming off of the swing point high from May 22nd to the low that was put in on Thursday. You can see the number here. I'll blow this up on the chart for you. The actual 0.382 number, which is what it hit on Friday, 9350.90. You opened up just a tad above that today, but if this was the rejection area, a 0.382 retracement says that there is a lot of energy still stored up then to the downside. And that would set up quite an A to B equals CD down. So the trend right now inside the New York Stock Exchange, it is to the downside. It is because of a tool that I now employ here. Went back, did some research on this, and it's really great to help understand when different changes in trend are taking place. Another one that you most certainly can always take a look at is the Summation Index out here, New York Summation Index. That is pointing down. The black line out here, which is the first little window underneath the price chart area, that has been pointing down ever since really started ticking down on May 21st, the day, and May 22nd for sure out there. So that is the trend. That is our friend, and that trend is still pointing down. All that we've seen here is a nice bounce on light volume, continuing to on with the 6-month unseasonal pattern. Doesn't mean the markets will be down for the entire 6-month period of time, but our trend at this moment is still, or is to the downside. Let's go back over to the indexes. And let's see, we did the Dow, we did the S&P 500. I'm sorry, we didn't do the Dow, we did the New York Stock Exchange. So let's go do the Dow out here as soon as my little clicker begins to work. So let's take a look at the Dow. It's traveling at 15,226 right now. Okay, it's going to give me a little delay here, are you? So it's traveling at 1526. We'll pull that down. This, too, just like the S&P 500 made a 0.618 Gartley buy pattern on Thursday, the Dow also doing the same thing. Now, what the Dow has done here this morning, it got up into the 0.618 level. Let's see if it got to the May 22nd swing point. Oh, it most certainly did. So the Dow here, which has been a weak link, the low of May 22nd is 15,265.96. And this morning it got up to a level of 15,300.64. So we want to be paying attention to see whether or not the Dow closes inside that level. And if that level, again, 15,265.96. If it closes inside there today, that sets up the run to 15,392. If it rejects that area, and we start to see some other reversal signals, such as some candlesticks out here, then it was a two-hit wonder, a nice little two-day bounce. But don't fret, folks. The market is good. Got a lot lower to go, a lot lower than where we are at. 877-927-6648. We'll be right back.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow off 11 points, S&P down 1, Composite up 2, Russell 2000 down 40 cents out here. And if we take a look at what's leading things to the upside, downside in the marketplace, we'll start off here with the NDX. The NDX 100 leading the charge percentage-wise to the downside. You got Maxim Integration, Catamaran Corp, CTRX, Alexion Pharmaceuticals, Regeneron Pharmaceuticals, Vertex Pharmaceuticals, Celgene, Biogen is in there. So you can see the pharmaceutical companies really being the drag inside the NDX 100. To the upside, it's Facebook. Facebook, percentage-wise, is leading the charge the upside. Then eBay, Wynn Resorts, Apple, Intel, Starbucks, Randgold, all moving to the, all putting some energy inside the NDX 100. If we take a look at what's moving things to the upside inside the S&P, it would be Monsanto, Apollo Group, First Solar, Edwards Life Sciences, CME Group, McDonald's, Darden Restaurant, the Red Lobster, folks. That's leading up to the upside. To the downside, it is the housing market. I mean the direct housing market here. Lennar Homes, percentage-wise to the downside. Pulte Group, D.R. Horton, Masco, good old Michigan company. Used to work on the tax returns. We used to work in a tax department way back in the early stages in the 70s, and did the tax returns for the Manoogian brothers out there. Masco Corp, that's also to the downside. You've got Campbell Soup. Well, it's got a little tomato soup is what they're featuring today. It is red out there. Cablevision, CH Robinson, U.S. Steel. That's really what's leading the charge to the downside inside the S&P, to the downside inside the, let's go to the upside inside the Dow. You'd have McDonald's, United Health, Intel, Merck, all those putting some energy into the Dow, to the downside, Caterpillar, Disney, Alcoa, General Electric, and inside the New York Stock Exchange to the upside, to the downside, everything is not okay in Camelot. Camelot Info, CIS is their ticker symbol. They're down about 5% here this morning. It's only $1.76 stock out there, so let's not read too much into it. You got Amira, Pulte Group, Lennar, Booz Allen, D.R. Horton. So we'll take a look at some of those housing stocks, actually, and see what they are doing. Putting some energy to the upside, you've got Acorn International. That's up about, it's a 6% change, but that's only 13 cents on a $2 stock. B&G Foods, Monsanto, Aegean Marine, Alon Blue, Square, and those. So let's go take a look at some of these housing stocks. So we're going to take a look at, because we haven't done that here on this show here for a while, so we're going to take a look at LEN, PHM, which is Pulte, DHI. Just going to write these down so I don't have to put this. We'll take a look at Masco as well out there. So let's go take a look at some of those stock charts and see what is going on. Before I do that, here's the NDX 100, by the way. The NDX did not make a 0.618 Gartley sell, not even a 0.50 retracement out here. Did make a Gartley sell. Gartley patterns, folks, if you read HM's book, it just requires an A to B equals CD pattern that completes. It does not need to be a Fibonacci number that it's moving into. We just simply like those Fibonacci numbers since they create such a nice harmony in the marketplace out here. But what the NDX 100 did do is, as it came down and it tested that gap up from May the 3rd, and gaps are very important, great releases of information to you, the NDX held that level. Now, albeit on heavy volume to the downside. It was big volume on that session on Thursday of last week. Nonetheless, it held, and that's important. And not only did it hold, it created a hammer candle that says that the what you're really watching for inside the NDX is not just a close of that gap out there, but a close below 29.1194. That spells curtains for the NDX 100. Well, curtains really would take you down to the next set of curtains, and that next set of curtains would take you down into that gap here from March the 4th out there, right around the 27.59-ish area. Now let's go over and take a look at some of those stock charts out here. Let's put it in show tunes, show charts. Let's go take a look and see what's going on inside some of these housing stocks, and let's see if there's any volume. So Lennar is the first one that we'll look at. LEN is its ticker symbol. Let's go see if there's any volume behind this move and where it's moving down into and what it is doing. So give me a moment here just to get this all set up on my screen here. So we've got this, we do this. Okay, so we're taking a look at Lennar. It's traveling right now down below its 200-period exponential moving average. It broke below that on June 5th, so I believe that was Wednesday. On Wednesday, I got back above it on Thursday, stayed above it, tested it on Friday. Now you're back down below that area. That is not a very positive thing. The last time that you saw Lennar travel below the 200-period EMA, well, it was back here when it made quite a correction back in July of 2011. So we're going to go now. You can't see it did move down into that oversold condition out here. Lennar Homes, LEN. We get back, we'll go take a look at that. 877-927-6648. We'll be right back, folks.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. A relatively quiet day here in the markets. Relatively narrow trading range. Right now, things are flat as can be. The Dow is off 24 cents. Oh, it's up 99 cents right now. So this could be like watching paint dry, which is not something you should do. S&P 500 is up 41 cents. Composite with the biggest move up $5 right now. Otherwise, everything is flat. So let's go check around some of these housing stocks. Let's continue to do that. We have we're looking at Lennar Homes right now. LEN is the ticker symbol. Noticing that it is traveling, that it is breaking the 200 period exponential moving 200-day moving average on the daily chart out here. That price point of the 200-day happens to be 37.94. Straight at 37.35, so the session is certainly not over. That area has really held as a strong support area ever since it made lows back in November of 2011. If this thing, and we can also see that it has, on the daily chart, moved down into the sold level. So we'll see if this thing is going to crack even further. If it does, 3208 is going to be the a normal retracement. That's only 0.382. Actually, this thing could pull all the way back to 24.46, and assuming it does it on some light volume out there, it would be all natural out there. The highest volume bar that I see out here that could act as some additional support just under the 0.382 level is from June 27th. 2012, about 18 million shares. That high is 29.44. 32.08 is the dead cat bounce at 0.382 level. So that's on Lennar Homes, L-E-N. Let's go check in on Pulte Homes. PHM is their ticker symbol. So let's go see what Pulte is doing. It's trading down. It's at 20.50 right now. Volume-wise, doesn't look to be too bad out here. Let me give me a moment here to. I didn't want to do that necessarily. Let's see. Let's do this. Okay, so we're going to take a look at Pulte Homes. Now, it is stronger if we just simply use the 200 exponential moving average, much stronger than Lennar is. The 200 period on Pulte would take you back into about $18 and change out here. It's trading at $20.49. So far, volume here today is 2.8 million shares, but this has a swing point out here. Let's see, the swing point low, you've got 10 million shares on June 6th. That was Thursday. And you've got 12 million shares. We're going to use 12 million shares. That's actually the swing point anyways from Wednesday, June 5th out there. And that low is 1995. If 1995 gets broken, and it gets broken with volume. So far today, 2.8 million shares in 1 hour of trading. It's got some volume if this level were to maintain itself. And if this thing gets below 1995, that would be breaking a swing point with volume. And if you take a look at the gap up here from April 23rd, that's got 13.6 million shares. So I'd use that 13.6 million shares really as my benchmark because that could be setting up a wicked A to B equals CD down. So that is on Pulte Homes. Says we should be paying attention to that one as well out here. Again, it should find, could find some support at that 200-day exponential moving average. Last time that it tested that was back in June of 2012. That area held, and it has really held ever since the December of 2011 time frame. So that's on Pulte Homes. Let's go check out DHI, I believe is their ticker symbol out here. And give me a moment here to pull that up. DHI. And so that is, let me refresh my screen on this, make sure I've got all of the right data on this. And just means I got to hit all the right buttons. There we go. All right, so as we take a look at D.R. Horton, this also into that 200-period exponential moving average last week. Now, it never got below it, unlike Lennar, but it came down here and tested this area, and also in the into the oversold territory, utilizing our relative strength, relative weakness indicator. In this case here, this should have some pretty decent support. And what I'm doing, folks, I'm just going over to January 29th. You've got a nice high-volume, wide price spread day out there. That had volume to the upside of 22 million shares. So if we take a look at that breakout, we'll draw the line along the bottom. So we'll go back to the prior session, January 28th, and the low is 21.11. So we'll go ahead and put a black line across the screen out here. Now, for support, you can certainly move that up and down. And that's, you can do anything that you want. I'm going to move it up and down out here. So you can see the price came back into that level here on February 25th with 6 million shares. 6 million shares was going against the 22 and 6.5 from January 28th. So coming back in there with about similar volume. That is pretty nice. Of course, this went and made an expansion. Looks like to me probably 1.272 expansion of a set of swing points, which would have been 25.55. It actually got up to 25.56. Sorry about that, folks. It missed it by a penny out there. And then it went ahead, moved lower, came back into this same area out here. Did it on April the 8th with 5.3 million shares. Again, the same kind of a test, coming back into a breakout area with lighter volume. Looks like it went ahead and made another expansion pattern. If we take a look at that one, going from the swing point high of March 20th down to the low as it came in there at April 18th, it got a little bit above the 1.272 expansion area. And, you could almost take a look at, was it a 3 drop? drive to a top pattern out here. Let's take a look at time sequences. We'll go from what would end up being drive 1, which would be the February 12th level. Your drive 2 out here would be the level from March 20th, 2013. And how about this? The third drive really, in essence, took place with that shooting star candle on April 29th. So this had a real nice 3-drive to a top. This is on D.R. Horton out here. I'll go ahead and actually draw that pattern in. And again, here's a nice little pattern that you don't, is not forced or anything like that. You'd had the 1.272 expansion. Obviously, you didn't get the 1.618 expansion as it made that 2732, but nonetheless, still a 3-drive pattern that has worked. Now, what this is doing, again, coming back into that breakout area, and it's still traveling below that high-volume session from January 29th. We'll put a red line across my screen on that so you can see how that area now is really acting as resistance. So maybe this is in nothing more than just a little sideways consolidation where the breakout session with 22 million shares will hold for the present time. But that's on DHI, D.R. Horton out here. And this, so this one, of the 3 that we've looked at, this one should have the best support, because if this thing breaks below 2111, you might as well just get out of the trade out there. You'll be below the 200-period exponential moving average. You'll be below a high-volume, wide price spread bar out here, and that says clearly that it wants lower price. Now, lower price will take you down at least into the November 15th area, right around $17.71 out there. So be careful inside DH Horton. Let's go take a look at Masco, just for old times' sake out there. Now, if you're not familiar with Masco, many of you have Masco products probably in your home because they've got, I don't remember all their brand names, but certainly Delta Faucets is one of them, on top of many, many others out there. And so as we take a look at, I put up DHI. That's not Masco. You actually want to type in MAS in order to take a look at Masco, MAS out here. Okay, so let's go take a look at this equity. Let me clean this stock chart up here as well. Takes just a moment to do that. It is trading out at 1998. So looks like this is trying to take on a little hammer candle. So inside Masco on Thursday, just like the NDX did, Masco formed a little hammer candle out here. So this is going to be important. That was the low of 1949, 5.4 million shares down there. And if that low gets taken out, you've got another hammer candle. How about this? You got some. You can see where the bulls are really hanging out inside Masco. In fact, just like when we were looking at what was it? Was it Pulte Homes, I believe it might have been. I can't remember which one was up last, so I apologize. But we were taking a look at the breakout session. This, too, has a breakout session. Wide price spread, accelerated volume, and this was from February 12, 2013. So let's do the same thing. Let's draw the chart. Let's draw the line across the bottom of the screen here. The breakout session, February 11th. I'll use the top of the candle right now. We'll make that a black line going across the screen here. You can see it breaks out, comes back and tests the breakout, and it does it with 5.8 million shares. 5.8 going against 23 million. I don't think so. Was coming back a little bit hotter than maybe you'd like into that February 11th candle out there, but still, nonetheless, it was okay. It held out here and went ahead and made that 100% move of a move by getting back there. So it should have really good support inside Masco at that same level, which we're going to call around the $18 range out here. Now, if this thing breaks the hammer candle low, which is 1949, it ought to find support at that breakout session. If it doesn't, that would spell real trouble inside Masco, because Masco's next high-volume bar is all the way down here, almost an island reversal bottom, back from the July 31st, 2000 time frame, in about the $11 range. It's at 1988 right now. But Masco should have some strong support if it can break that hammer low. And so when you break a hammer, if you're long, you're wrong. And what that always means, folks, it means you look to the left-hand side of the chart and you look for your next areas of support. Inside Masco, it's got actually 2 hammer candles out here. One, the trading session of April 22nd, another on April 17th out there, as well as a bullish engulfing candle on the session of April 5th. So the bulls really out here showing you where they are trying to protect their position. If you wanted to get into Masco, I would say try doing it right around the $18 level. It's at 1985, unless you start to see volume pick up to the downside out here. Let's see. To the upside, we've got Priceline and Google. So let's go check in on those stock charts and see what they have going on. In fact, they are probably inside this little quadrant that I'm in here right now. So let's go take a look at it. Where is Priceline? PCLN. There we go, Priceline. So and Priceline, we want to be paying attention to Priceline because it does have an island reversal. Now that island reversal here looks like there's trying to get up there and rescue some passengers today. The high so far 824. The bottom of the island is 824.19 out here, and that was this 2-day session from May 20th as well as May 21st. Why do we want to pay attention to Priceline? Because everybody in the media talks about Apple as if Apple was the real big winner out here. I would say not so fast. Go back and take a look at Priceline and go back to its lows at $46.61 back in October of 2008. It's traded $8.23 out here. Priceline, a much stronger stock, had a even better move than Apple did, yet Apple is the darling. I believe that Apple's got a meeting going on out in San Francisco Users Conference or something that is maybe going on today. In any event, Priceline, we want to pay attention to Priceline because this really is one of the stronger stocks here in the marketplace. If this thing can close back inside the 824 level, 825 level, it will be rescuing passengers from that May 21st session out there, little island reversal. You get to close back below it, and all they were doing was they were just simply taunting the folks that are struggling that happen to buy in on that session. They were between 847 down to a low of about 825. Let's go out to Denver, Colorado to Mark. Mark, thanks for calling. Thanks for holding. How are you today?
Good. How are you?
Excellent. Did you have a nice weekend?
I did. You?
Good. Yeah, I did. Absolutely. Is it nice and summery out there now?
We're already getting 90s here.
90s. Yikes. Yeah. Now, do you do some bike riding?
Oh, yeah.
Yeah, so a lot of mountain. Yeah. Now, what's the season on that? When do you start that? And does it get too hot for you at all in the summertime to do that?
If you go up to the mountains, it's not usually too hot. You just have to wait till the most of the snow melts so that you can get rid of some of the mud.
Okay.
And it's good. So
okay, cool.
Give it till about mid-June-ish. Yeah.
Oh, cool. You want to take a look at the U.S. dollar index, I think.
Well, actually, kind of, yes, and also how it's been correlating to the market. So This is the first day in I guess what I've been seeing is the dollar up, market up, dollar down, market down, which is kind of the way it used to not be. And now I'm wondering if it was looking like that might be changing because the dollar was up for a while and the market was down, and now everything's up again. So I was wondering what your thoughts are on that.
Okay. Let's see here. I've got to go find my chart here that see if I can find it. So the chart that here we go. Let's see here. The SP 500. Let me see if this is actually it. I got to pull up my correlation, so give me a moment here to do this. Yeah, okay. So what I've got on my screen is the S&P 500. And on the S&P 500, so the S&P 500 on my screen are the bars, are the actual candlesticks on here. And I've got a black line, which is the euro Japanese yen, and then the red line is the U.S. dollar index inverted. So that way it maintains that correlation that, in essence, that you're talking about. Now, the real correlation with regard to direction of the market, in my opinion, is really the euro Japanese yen. So if you're trying to find a correlation or you're trying to find a divergence, my suggestion is pay attention to the euro Japanese yen. That's a black line on my chart. And remember, when you take a look at that overlay on my chart here, the mere fact that it's above or below the actual S&P 500, that doesn't mean anything because the axis is different. That's at 100 versus the S&P at 1645 right now. So it's really just more the from a directional standpoint. And you can see that the euro-Japanese yen has done a better job correlating the market than the actual U.S. dollar index. But would you hold on through the break, Mark?
Sure.
Absolutely. We're going to go back out to Mark in Denver, Colorado. Right now, the Dow is up 11. S&P is up 2. We're taking a look at correlations between currency pairs. That is King Dollar as well, and the markets. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. My apologies. I've lost my connection here, and so Mark. So we had to change over here. Mark, you still on the line? Do we still have Mark? I'm going to assume that we do, as we just kind of bridge the gap here right now. So, folks, what Mark was asking, or at least I think that he was asking about, was really he was taking a look at the U.S. dollar index, which was up, and the market was up as well. And if I don't address your question mark, my apologies. You can send me an email or call me back tomorrow, and we'll go through it. And what I have on my screen here right now is that chart of the S&P 500 that we were looking at before the break. And the currency pair, because it really is all about understanding the currency pair, is the currency pair that best tracks the U.S. stock exchange is the Euro-Japanese yen currency pair. Now, I can't really tell you why that is. I just know that it is, and if you're following along with us on Tiger TV, what you can see here is you can see the black squiggly line. That is the Euro-Japanese yen. And again, you're looking for the directional correlation out here. What I look for is divergences. Divergences help me to understand when a market correction is ensuing. And in this case here, you really want to be paying attention to what this currency pair does. Now, the red line on my chart here is the U.S. dollar index, and it's inverted because that is the normal correlation that we would expect to see with the U.S. markets, meaning that if you see the red line moving down, that's really the U.S. dollar index getting stronger. And, there was a period of time where we saw that correlation exist, that kind of dance, that two-step inside the U.S. markets, but that no longer really is there. And so you want to go with the currency pair that's giving you the best information, and so that's why I suggest if you're trying to do a currency correlation, take a look at the Euro-Japanese yen currency pair. Now, if I switch over to the commodities still the same thing. Is still the same currency pair from the standpoint of this. The U.S. dollar index, which is on, this is the chart here for gold, for the daily chart in gold. And I've got two lines on here. The black line is the U.S. dollar index. It, too, is inverted, meaning that if we see a stronger dollar, then we would see which would be moving down on my chart. You would start to see gold also moving down. And you can see that the U.S. dollar index and the commodity pretty much correlates well. There are some time periods where the correlation became unglued, but probably 90% of the time or more, that correlation, and it's still out there. So with regard to the U.S. dollar index, I don't think you trade the U.S. dollar index and then pay attention to the U.S. markets. You take a look at the U.S. dollar index, and instead you pay attention to what's going on inside the commodity sector out here. The red line on my screen, that happens to be the GDX, the Gold Miners ETF, and that Gold Miners ETF, that follows along with gold. So you can see that correlation there, and of course that makes sense out here. So we're looking for potentially a bottom in the miners, maybe a bottom in the in gold. Right now, while gold still travels inside its lower swing point that has not been tested, says the miners could also see a pullback. And that's really what we're looking for, is to see, can the miners pull back with some light volume and actually form a bottom out there. That would be in the GDX. That would be in the HUI as well. So that's how I would use the correlations. We'll try to do this here real quickly. And again, what you want to do is, if you can overlay these things on your charts out here, the currency pairs, I'll try to put this up on my screen here right now, although you may not even be seeing my screen now that I'm talking about it. Well, it seems like I made it through the segment, so my apologies. Tune back in, and it probably couldn't see my screen, so what I will do tomorrow is make sure that I go over that correlation for you. Folks, stay tuned. Basil Chapman is up next. Have a marvelous Monday, and I look forward to seeing you soon. Take care, folks.